So they're both important, but important for different reasons. And we just, you need to know why each one is important, how to utilize them. It's not easy. It's really difficult, actually. That's really the hard part. Because I can find a million levels on every time frame, but only some of them are going to hit and be significant. You know what I mean? And there's a lot of other variables to it, but your higher time frame is going to get you, more reliability, like 4 hour and up. And I would say 4 hours kind of a mid time frame. And then anything under that is going to start gaining you more accuracy but less reliability.
There's a lot more percentage to be made in trading because you're trading up, you're trading down, as it climbs, rather than just investing near the bottom or wherever and waiting
Yeah.
things.
And like it doesn't, like, that doesn't mean that you have to be sitting in front of your computer scalping, taking 100 trades in a day on the 1 minute chart. I mean, I have absolutely zero desire to do that. Like I did in the beginning. It's like, oh man, I want to scalp. It's exciting. It's fun, blah, blah. It's like, no, dude, you don't, trust me. You don't want to do that. It's exhausting. You're sitting in your chair all day. I'd rather sit there and plan, a trade or two, maybe three in a day, and then a couple, one or two big trades in a week, and then one or two big trades in a month, and adjust my risk for those things. But I don't want to sit at my damn desk all day long and stare at a computer until my damn eyes are bleeding. You know what I mean? Everybody thinks they do. And I, like I said, I was the same. I thought I did as well. But I'm telling you right now, it sucks. It's mentally and physically exhausting, and it weighs on you because all those little losses, man, they're just like, they stack up, and your wins, they feel good in the moment, but they evaporate so quickly, like that good feeling. Whereas the losses, they're there almost like forever. You know what I mean? It's such a lopsided balance of mental weight, or the alleviation of mental weight, if that makes sense.
It does. I mean, I've kind of veered towards the 1 hour and the 15 minute now because I'm finding that is much easier, as you say, and less anxiety, less stress,
Yeah. And you can
and
still
easier to
use
see.
those micro time frame levels. You know what I mean? I do. Like I just use those to dial my accuracy in, or as it's approaching my level, or it hit my level and now I'm waiting to see how it responds. I'm going to go down to those micro time frames just to see, like, I want to see it in action as it's unfolding. But like, to pick a level solely on like a 1, 5, or 15, or even an hour, unless, again, if you're like scalping and you're only expecting a, quarter or half or 1% or even the 2% move, okay, that's fine. But the problem is, and this was for me as well, is that just because there's a level on like a micro time frame, you can't always expect it to just yield these phenomenal results. Like, oh, it's going to be a 10% move. Sometimes they do, but more than likely that's because it was significant on a higher time frame. So you use your higher time frames to really find your big points, and then you kind of adjust that down and adjust your expectations as you go down in time frames. And that means overall, like, percentage move, as well as the duration of that move.
Yeah, remember you saying the lower time frames dictate what the higher time frames are about to do.
Yeah, about, yes. And the higher time frames dictate what the lower time frames are doing, you know?
Yeah.
So it's like this, it's like the snake eating its own tail kind of thing. It's just like a cycle, you know? So they're both important, but important for different reasons. And we just, you need to know why each one is important, how to utilize them. It's not easy. It's really difficult, actually. That's really the hard part. Because I can find a million levels on every time frame, but only some of them are going to hit and be significant. You know what I mean? And there's a lot of other variables to it, but your higher time frame is going to get you, more reliability, like 4 hour and up. And I would say 4 hours kind of a mid time frame. And then anything under that is going to start gaining you more accuracy, but less reliability and less sustainability. So, it's balanced. Like 4 hours, really good, you know? So, like looking from the top down all the way down, and then from the down, like the bottom to the 4 hour, like I think that's a good way to look at it. It's like I'm going to start on my very high time frames. I'm going to work my way down, find out like the points, and then I'm going to start from the bottom and work my way back up to the 4 hour, and then kind of meet back in the middle. I think that's a good way to kind of think about it.
I've found it difficult the past couple of weeks. I mean, if you look at the recent chart, especially on the smaller time frames, it's been an absolute nightmare trying to trade.
Yeah, it's because it's like ranging. Yeah, so more than likely we'll end up kind of moving up here in the near future. I don't think that it's, like, I mean, gonna like be sustained or anything. But I would say that will end up moving. So this one. Yeah, I would say we end up coming back up to either here or yeah, I would say like one of those three areas. I mean, obviously there's more in here, but I'm just roughly saying like somewhere in here, Um I don't think that, I mean it could very well come on like a higher time frame, see what the weekly looks like. Um yeah, yeah, I don't know. I think, you know, I really don't see it moving beyond that personally. Not in the near future. Yeah, that was that one I almost marked that. I was just marking it kind of fractally, but right there. Yeah, I don't really see it going above that. I do think that it will come up to that. It's not to say that it's going to. I'm just saying that is more likely to me at this point in time than most other scenarios. So that's that. That's that.
So you do believe it will
It's
go up before it goes down?
it's always going to go up before it goes down, pretty much. I mean, that's kind of really putting it like generally speaking, but yeah, it's just never always like everybody's like, oh, it's always going to go up. It's always going to, you know what I'm saying? Like dramatically, it's all, and it might, like it might dump from here, but man, it's so much safer to find the places that it doesn't look like it's going, because that's just how they work. They need to fill their orders, so they want to like, you know get people thinking it's going to do one thing and then they make it do the other. And then this is when we all start trading, we're always like, damn, like I thought it was going to do this and I did this, and then it ended up doing exactly what I thought I was going to do. It just barely stopped me out. It's that whole same thing. That's just kind of the mentality that you have to adopt. It's not to say like, oh, just do the opposite of what you're thinking, but you just got to think about it not as a trader trading a small account, but understanding why a trader or market maker, like, with a large account, why they have to do the things in which they do, and then trying to put yourself in that mindset, and then just, following the little footprints that they leave, and get in their mentality, because that's what's really going to help you. because it's like here, case in point, like it's like, oh, they freak everybody out at dumps, right? And then they're like, all right, well, let's just step it up. And it's like, all right, oh, cool, cool. We found the bottom. This is the bottom, right? We're good. We're good. We come up and then, dumps down again. It just does the same thing over and over. It's just kind of the same deal. Now, if it would have come up here and closed above this on all the time frames that this was visible in, and it would close above it, then it would be like, all right, well, we're probably heading up to this area, but we never did, you know. So, and this big dump down here, like that's kind of another sign, like everybody's freaking out. That's why it's ranging. They're just building liquidity. And a lot of this liquidity is just lined up right here. Like if we look at probably the 4 hour, the 1 hour, the 1 hour, probably the 4 hours pretty visible too. Yeah, you can just see all this liquidity right here. And then you're trending up. So it may sweep down. I think it could very well sweep down to here and then make that move up. But I think on like the higher time frames, ultimately, I think that it is likely that it's going to come up to here. Yeah.
I mean, I'm not trading until I see these liquidity sweeps. I've been stopped out so many times recently. It's like
Yeah.
the absolute nightmare the way they do that.
Yeah. Well, that's why you always have to look in the past. Like if I was looking to take like a long in here, I'd be like, well, what is back here? You know what I mean? And I'd be like, well, I got this low, I got that. Okay. And let me go a little further back. What is back here? Oh, this was really important because this was like a all-time high, and then we lost it and then made a new one and then climbed off of that. And that's where we zoomed up, right? So like I'm gonna look in here, and if there's something enticing back here, like I'm gonna expect that to be hit at some point. Now, that's why I said it's kind of just safer to expect like the unexpected and kind of plan for that. And if you want to take two trades, just cut your position size in half, reduce your risk, do whatever you have to. So at the end of the day, if you take two trades, you only lose the amount that you lost in one. Do you make less? Yeah, of course, but hey, it's better to make less. This goes back to what I said earlier. It's better to, lose out on profits than it is to incur losses. That's a hard thing to wrap your head around, man. It's freaking hard because our pride, our ego, and our greed come into play. So, we tend to struggle with that.
Yeah, when we have more time, maybe some other time, maybe you could give us an example of taking them two trades then, because
Yeah.
that's something I'm not sure where to enter, where to put stop losses, and I know it's something that you've said we'll cover in more detail.
Yeah. Your lows are really where you want your stops, but you have to, I think, just to touch on it, let's say this one thing real quick. Is like, if let's just say that like I want to take a trade in here, right? And like this is my stop, but let's just say this wick it came down just below those lows, and if I were to use those as my stop, like that I would have just gotten stopped out and then would have moved up, right? Well, again, this goes back to what I just said before. It's like, what is back here though? You know what I mean? Because like now you got this low. So this will be the better low to use as your stop versus this one. You know what I mean? Like if this one were to come down to this point, and then move up. You see what I'm saying?
Yeah.
So now if that doesn't fall in line with your leverage amount and risk tolerance or whatever, adjust it. Like adjust your leverage, adjust your risk. You know what I'm saying? Adjust your position size. Like it's easy to fall into like, oh, I've got a 50 or 100x, or I've got to put, $100 or $500 on every trade. You don't have to. If you see two places that are two good levels, like for instance, like this level. So like, let's just say we like were at this point down here, right? And let's just say like, all right, well, I see this level, and then fractally, of course, like there's like this level, and I'm like, all right, well, I think that it's going to come to this, and we're going to go down, and we hit it exactly, right? But then it comes down, if we're not really watching the move by move, and then it comes up, and then it tags this one, our other one. And it's like, if we put all of our money on this one, or like we say here, like put all your eggs in one basket, and then we drop the basket, like all our eggs are broken. Now we're out of gas. If we say we're going to put $100 on this level, um, you know, it comes up and it hits it, and like, yeah, it comes down, and we're like, all right, cool, we made money so far, we're good. We take profits, whatever. But then, like, ultimately, it comes up and it just barely goes over it, and it almost just like touches our level just here. It comes real close, right? So then that was like, ultimately, that was the target. And if we would have put all those eggs in that one basket and just put all our money on this, like, if we were smart enough to take profits and enough to cover our losses, maybe we made a little, maybe we were net zero, whatever. But if we would have just taken and split the money between this trade and that trade, then we could have taken this trade, taken some profits, it came back up, okay, we're still good, we kind of removed risk, or we made a little money, and it comes up and it's like, so all right, at that point we're net zero, or we made a little bit. Then it comes up to our next one, and we're in it, and then bam. You see what I'm saying? So it's easy at this point in time to have the mindset of like, well, yeah, but if I take this trade, and it just comes up to here, and then it dumps, like, I'm not going to make anything, blah blah blah. But that is a trap, man. Like, that's the kind of thinking that they're banking on you having. Like, that's how they get your money. You know what I mean? Like, that's really it. Like, that's the main reason, is that mentality. And that's why, that is the fundamental reason why psychology is so important in trading, because it's overcoming that right there. Like, in my opinion, I personally believe that. And it's freaking difficult. It's really hard, and it's not the only aspect of trading, of course. Like, we have to learn how to see all these levels, and what is important, what's not, and what's a trap and what isn't. But that, to me, is that's the most difficult thing to overcome. You can have all the knowledge and levels and trends and this and that, but if you can't overcome that, you're going to be like hurting. You're going to be out of gas a lot. Well, I would recommend, like, just quit trying to take longs, and focus on shorts. And if you're gonna take longs, make them a quarter or minimally half of the position size that you would normally use, or half the leverage and half the position, or you
Okay.
see what I'm saying? Like, adjust it dramatically for longs. Longs are risky. They're going to happen, but when you're trying to learn, like, I mean, I'm certainly not taking a lot of longs. Like, I mean, obviously I haven't been trading a whole lot the last couple of weeks because I've been sick, but uh, uh like, even like, man, dang, since like here, like, I don't think I've taken very many longs at all. Like, if I did, I was like in and out for a couple percent max. You know what I mean? Like, I've just been focusing on shorts, man, because that's what it's telling me it's doing. It's going down. Like, yeah, when you get good enough to predict these bottoms, but you got to understand, like, when you're going, counter trend trades, you're going to be fighting sweeps. Like, look at this. Like, as you look at this thing coming down, you don't see a ton of big sweeps on the top. Like, yeah, there's little sweeps in here, but like, look where all the big sweeps are. They're on the bottom side. So those are like pro trend moves. You know what I'm saying? Like, they're on the the
Interesting.
bottom side of the direction of the trend. Whereas, like, a lot of times that's just how it happens. And they're going to be more dramatic going down when it's like fear than it is greed. You know what I mean? Like going up.
Yeah.
So something to keep in mind.